Hey everyone, it's Justin here, America's Honest Tax Accountant from Number Crunch Nerds. In today's video, we have a case study coming straight out of my 2026 tax prep and planning class. Let's hop into the fact pattern, and then we will identify the tax issues at hand. Okay, so starting right here in January of 2024, spouse number 1 completed a Roth IRA contribution of $8,000. Then coming over here sometime in the middle of 2024, spouse number 2 did a Roth IRA conversion with respect to her IRAs. And keep in mind that even though everything related to IRAs is tracked and calculated separately by spouse, the result of any IRA decision that has a tax impact could affect both spouses equally if they file a married filing joint tax return. So now let's fast forward to 2025. During tax season 2025, spouse number 1 realizes that the Roth conversion completed by spouse number 2 in 2024 causes the family's 2024 AGI to increase to a level such that they are now in the Roth contribution phase-out range for 2024. So realizing that, spouse number 1 scrambles to recharacterize his 2024 Roth contribution. Just to be clear, we're talking about this $8,000 contribution right over here. And to recharacterize something related to an IRA simply means you're telling the IRS, hey, I didn't mean to do this over here. What I really meant to do was this over here. So in this case, spouse number 1 is going to recharacterize this from a Roth contribution, which at the highest level is just an after-tax contribution to an IRA, and he's going to recharacterize it to an after-tax contribution to a traditional IRA. Now, when spouse 1 went to complete that process, here is what happened. Of the $8,000 2024 Roth contribution related to spouse 1, $5,680 was determined to be the excess contribution. In other words, this was the amount right here that was phased out by the fact that the couple's AGI was too high for 2024. And in addition to that, it was determined that there was $783 of earnings related to that specific amount of excess contribution. When you do a recharacterization, you also have to take any related earnings with it. So when it was determined that spouse 1 has to take this amount out of the Roth IRA and put it into the traditional IRA through the recharacterization, this amount of earnings right here has to go with it into the traditional IRA. Okay, so to summarize, spouse number 1 calls the broker and recharacterizes the excess contribution along with the earnings from Roth to an after-tax traditional IRA. Okay, now after spouse 1 completes the recharacterization of his 2024 contribution, we get to the family's tax return, and on the family's 2024 tax return, Form 8606 is filed for spouse 1, indicating $5,680 of non-deductible contributions to traditional IRAs. Remember that Form 8606 is filed for a variety of reasons, one of which is when you make a non-deductible contribution to a traditional IRA. And also remember that the amount in this case is $5,680 because the original $8,000 of Roth contribution wasn't fully phased out. It was only partially phased out. And this $5,680 was the amount phased out. And that's why this is the amount of non-deductible contribution to the traditional IRA. Okay, now, according to the fact pattern provided by spouse 1, the $783 of earnings is included somewhere in the family's 2024 tax return, and it was subject to tax at the family's marginal rate for 2024. However, interestingly enough, the $783, which apparently remains in the traditional IRA, which we will discover in just a few moments, it doesn't actually get included on the Form 8606 as an after-tax contribution to a traditional IRA. And so what is the tax issue that we are facing right here? I will give you a few moments to think about that, and then we will answer that question coming up. Okay, now, for future reference, I want you to note that $5,680 plus $783 is $6,464. and this number will become relevant shortly when we get to the 1099s related to this issue. Okay, going back up here, also in January of 2025, spouse number 1 contributes another $8,000 to his Roth IRA, and then recharacterizes it to his traditional IRA shortly thereafter. In addition, that particular $8,000 of Roth IRA contribution, which was for 2025, it loses $118 of investment value by March of 2025, such that the remaining value of that original $8,000 contribution is $7,882. And then also in March of 2025, spouse 1 does his own Roth conversion consisting of the following items: $6,464 related to this amount of recharacterized 2024 IRA contribution, plus the $7,882 that remains from the 2025 contribution, for a grand total of $14,346. Okay, and then finally in January of 2026, spouse 1 receives 3 Forms 1099-R, and they are all dated 2025 on them. The first one has $6,464 with a code R. The second one has $7,882 with a code N. And the third one has $14,346 with a code 2. And so my question to you for today's case study video is, what are the tax issues at hand in this situation? Well, going right down here, tax issue number 1 is, do we have basis in the $783 of earnings from above? By the way, what is basis again? Well, in the context of traditional IRAs, the word basis means after-tax money that is sitting inside of the traditional IRA. Okay, now if we take a look at the actual Form 8606 that was filed by this couple for spouse 1 for 2024, as I mentioned, the only amount on there is the originally recharacterized $5,680, which is this part of it right over here. And it says on line 14 of the 8606, this is your total basis in traditional IRAs for 2024 and earlier years. So in this situation, there wasn't anything for earlier years, and therefore this $5,680 is the only basis in that traditional IRA at the end of 2024. Okay, but what are we going to do about this part right here, this $783? Remember that it was stated in the fact pattern that tax was already paid on this $783, and it was also stated that the $783 remained in the traditional IRA and was included in the conversion of the $14,346. Here was the grand total again right here, the $6,464, which clearly includes this $783, plus the $7,882 related to the 2025 contribution. That's $14,346, and that's the exact amount that is on this 2025 1099-R. This is the actual 1099 received by this couple from the broker related to the Roth conversion for spouse 1. It has distribution code 2 on it, and right here is how I want you to understand this tax issue. If the 2024 Form 8606 says that the total basis in all traditional IRAs as of the end of 2024 was $5,680, and the 2025 Form 8606 has non-deductible IRA contributions for 2025 of $7,882 on it, remember this is the amount right here that was recharacterized after that small bit of investment loss, that's why it was down from $8,000. That was recharacterized from a contribution to a Roth IRA to an after-tax contribution to a traditional IRA. That gives basis in the traditional IRA and is reported on the 8606 for 2025, and therefore the total reported basis for spouse 1 before his conversion is $5,680 plus $7,882 equals $13,562. But then if you do a Roth conversion of $14,346, the system will see $13,662 of non-taxable return of basis plus the $14,346 of conversion that was on the 1099. And so what is $14,346 minus the $13,562 of basis? It's $784 of what exactly? And the answer is the system will think it's taxable distribution coming out of a traditional IRA. Why will it think it's a taxable distribution coming out of a traditional IRA? Because there's only this much basis sitting on the Form 8606. Now, does it make sense that there should be $784 of taxable distribution included in that conversion? And the answer is, of course, it does not make sense. The tax on that $784 was already paid on the 2024 tax return. And so the problem that Spouse 1 is facing now in 2025 is that the Form 8606 from 2024 doesn't reflect that basis. So that is tax issue number 1 right there. And it's a good lesson to remember: if you have paid tax on something already that is sitting inside of your retirement account, you have basis in that money, and that money should not be taxed again when it is distributed to you later. But based on the amount on the 248606, it looks like we're going to have a problem unless we do something about it now. And so inside of the 2026 tax prep and planning class, we're going to have to figure out how to get credit for this basis. Do we amend 2024? Do we just add the $784 of basis to the 2025 Form 8606? This is one of the many items we will be working on this week inside the class, figuring out how to correct this unreported basis right here. Okay, now tax issue number 2 is as follows. What do we do with the 1099-R with code R on it and the $6,464 listed in box 1? This is a 2025 tax form with an amount related to a 2024 IRA recharacterization. Both the recharacterized amount and the earnings were already subject to tax on the 2024 tax return. We can also confirm what code R is right here in the Guide to Distribution Codes, which comes out of the instructions to Form 1099-R right here. Code R is a recharacterized IRA contribution made for 2024 or any other previous tax year. And so guess what's going to happen if you try to enter a 2025 1099-R with code R on it into the 2025 version of TurboTax? What will happen is it's going to flag that 1099-R and it's going to show you this message below. It's going to say, hey, it looks like you may need to amend your 2024 tax return. Your 1099-R reports earnings on a contribution you made in 2024. This could happen from a variety of reasons, one of which is right down here, a prior year recharacterization. And so they confirm this info needs to go on your 2024 tax return. If you already filed your 2024 return, you will need to amend it. However, we should note right here that this is only true if spouse number 1 hadn't included the 2024 recharacterization in the 2024 tax return already, which, by the way, spouse 1 already did. Now, going back up here, I know that this recharacterized amount was already included in the 2024 tax return, both because I asked spouse 1 about it as part of working on this issue in the 2026 tax season prep and planning class together, but also because it's listed right here on the 8606. The problem, however, as I've alluded to a number of times and asked spouse 1 about this, is what about that 783? That 783, as we've already said, did not make it onto the 8606, and so with respect to this, do we have to amend the 2024 tax return? Not with respect to the recharacterized amount, but we're going to be thinking about it possibly related to the $784 of basis issue on the earnings related to the recharacterized amount that we have discussed several times now. But the real question I want to focus on for right now is, what about this message right here? And more specifically, what do we do with that 1099-R that has a 2025 tax year listed on it, but we already know that the full amount listed on that 1099-R was already taxed in 2024? And so the answer, which sometimes makes people uncomfortable because they have a tax form in their hand and they want to do something with it, is in this case, you do nothing with this 1099-R. You just keep it with your records and you do not re-include this amount with your 2025 tax return, because as has been repeated several times now, this item has already been dealt with and reported and taxed on the 2024 tax return. By the way, today's IRA recharacterization case study is just one one of the many topics that we are currently going through in my 2026 tax season prep and planning class. Already posted to the 2025 tax return prep portion of the course are training videos that include 8606 with RMD, 8606 with Roth conversion, 8606 with QCD, 8606 with rollover, 8606 with 403B, Roth IRA basis tracking, a brand new missed RMD case study, RMDs from multiple accounts taken as a single distribution, plus many more videos already posted and many more to come through April the 15th. We're going to be getting into rental property, itemized deductions, AMT, and numerous other topics as requested by class members. All class sessions are recorded and available for you to watch on your schedule and at your convenience. Join the class today and get your specific tax questions answered and/or your specific fact pattern analyzed in video format, with responses from me arriving with complete TurboTax entry steps, calculation analysis, or whatever additional details are necessary to get you the answers that you need. Check out these reviews that are specific to the 2026 tax season prep and planning class. Thank you for your help. You have been more than helpful. Thank you for getting back to me so quickly. Thank you for this incredibly thorough video. Justin, thanks again for all of your help with this. I really appreciate you answering my question. Thanks for your quick and detailed reply. And you did a great job as always. The list of positive feedback goes on and on. My 2026 tax season prep and planning class is where all the action is between now and April 15th, 2026 on the channel. You can find a link to join the class in the description below this video on YouTube. And that's going to be it for today's IRA recharacterization issues video. Thanks everybody for watching, and I'll see you next time.